Welcome to the Currencies in SAP Business One webinar. So today we're going to cover the setup. We'll talk about definitions. We'll add a currency. We'll add an exchange rate. We'll talk about the currency settings on both GL accounts and business partners. The price lists and how they work with currencies. We'll look at documents and currencies. That's both at the document level and at the line level. And then we'll talk about revaluation for AR and AP and the bank account. So into the setup. So I want to talk about the purpose. To use different currencies and revaluation, we want to get a point-in-time value of a foreign currency transactions or accounts that may differ from the original expectation. So for example, you may have an AR accounts receivable out there for 10,000 US that's a little older with an older exchange rate. What's that worth to me in Canadian now? Because it got booked at a different Canadian rate before. You may also be asking, what was the appropriate Canadian value of my US bank account at last year end? So we've got a few different currencies within SAP. You've got the local currency. That's the basic currency that you're using most often. It's used for financials and tax reporting. There's also a system currency. That's a common currency within your larger company, and it would be the same across multiple subsidiaries and can be used for consolidated financials. In most of our customers, your local and system currency will be set to the same. So every transaction is recorded in the local currency and also in the system currency, and a transaction can also be recorded in a third currency of the foreign currency. So let's take a look at SAP in the company details section. So under administration, system initialization, company details, on the basic initialization tab, we see in this Acme Canada demo database, the local currency is set to Canadian dollars and the system currency is also set to Canadian dollars. So when we set up a new currency, we set it up under administration, setup, financials, and currencies. We'd use this screen very rarely at your initial implementation. We would have brought in the currencies you're expecting at that time, and you can add as you go. So just to point out that buying and selling in US dollars and using a US bank account, that's a very good reason to set up the US currency in SAP. If you're buying a one-time part over the internet from a country with a foreign currency and you don't expect to use it again, you're probably paying by your credit card, and that's likely a Canadian dollar transaction by the time your credit card statement gets to you and what you pay in. So in a case like that, I'm not setting up a currency for every currency I've ever thought about within my company. I'm just really using the ones that I want to transact SAP in. So like I say, US dollars is a very common one. Euros is probably secondary what we use. And then after that, if you're getting many rows in this, you might want to reconsider it. So let's go administration, setup, financials, currencies, and there's where our currencies are. And in this demo company, we have the Canadian dollar, the euro, and the US dollar. So now we want to talk about adding a particular exchange rate. And so we're doing that under administration, exchange rate, and indexes to set a rate. So a rate is set for each currency for each day. Now there's easy ways to mass update those, but each day does have its own unique value for currency. The rate must be set for a specific date before it can be used in a document. So I will have to set up my US before a value for tomorrow before it's actually used on a document tomorrow. If it's not used on any document at all tomorrow, I wouldn't really have to set up a US for tomorrow. And one other point, this window can automatically pop up on the start of your SAP sessions, and sometimes the controller does this. So let's set that exchange rate. That was under Administration, Exchange Rate and Indices. And what you see here is we've got the euro and the US dollar. And in the euro, I've populated some of my days. And in the US dollar, I've populated all of my days in November. So if I try and post a document in euros to the 9th, I'm going to get an error because I don't yet have the exchange rate there. It'll force me to set one up first. So one of the easier ways to do it is to set rate for selection criteria. So we'll click on that. And since I have some spaces in there, I'm going to set my euro to 1.42. And I'm going to set it in some days. So we'll set it from the 8th to the 11th. And I could also do the US dollar at the same time and say okay here. And so you see it populated my 8th to 11th. So commonly people are doing this, 2 weeks into the future or maybe the whole month. We'll update that. You've also got auto import and auto export buttons. Those are used from bringing in exchange rates from other SAP companies. There are utilities such as Boyum's B1UP add-on that will set this daily for you automatically. So one thing I want to point out, the exchange rate to the US dollar, I've put it 1.2821. I'm entering it as it cost me $1.28 for every $1 US I buy. It is not put in as 0.8, saying I get $0.8 US dollars for every 1 Canadian. It is the 1.28 or 1.25 number. That is a setting in your system, but by default, the Canadian and US localizations are both set here, but this way, but consider your localization because some are set opposite. So we'll look at the currency settings on the GL accounts and the business partners. So starting with the GL account, as we add new GL accounts, you may have noticed that they get a default. They may get a local currency or they may get all currencies. In general, though, we change the currency on the financials chart of accounts. We can set it to a specific currency or to all currencies. We often start at a single currency and then move it to all currencies as we need it. Once it's transacted against this account, we can't change it to a different single currency. We can always change it to all currencies. So the general recommendation is to set your GL accounts to match the expectation of what the sorts of transactions are that are going to go through it. So in inventory, we're commonly seeing that as in all currencies because inventory is often bought from both Canadian and US vendors. So we want to transact both currencies there. A US bank account, we'd only want that to be the single currency of US dollars. And something like a payroll account is probably set to a single currency, again, of Canadian dollars. So back in company details is where a new GL account gets its default. So in my case, if I add a new GL account, I'm going to get the local currency. So let's look at a GL account. So I've created this account called US AR in US dollars. And you'll notice that the currency of this account is a US dollar. And I can display my balance in either US dollars of $5,567.98 And Canadian dollars, the current value of that is $6,787. This account, short-term investments, is set to all currencies. So one thing to note about all currencies accounts is if you do set an account to all currencies and do reconciliation within that account, you must reconcile in only local currency. So that's one of the reasons for sure we'd want the US bank account to be a US dollar, because we don't want to be all currencies there, because then we'd have to reconcile our US bank account in Canadian dollars, and we want to reconcile it in US. So for business partners, it's very similar rules to the GL accounts. We'll set it on the business partner master data. We can again set it to a specific currency or all currencies. Once it's transacted, we can't change it to a different single currency, but we can change it to all currencies. One thing about all currencies I want to point out is the initial document in the chain must have the correct currency. So when you're in purchasing with an all currencies vendor, you must select on this purchase order, I intentionally want to transact in which currency. Because the follow-on documents, the goods receipt PO and the AP invoice, will also inherit that same currency. And a business partner that is in a foreign currency as their currency, we can view their balance in both foreign or local. And one thing to note is as you're setting up your customers and vendors and putting in their currency, make sure the AR account and AP account that you have associated for this for AR, for control account, is a suitable currency. So let's show that. So this customer, we're going to transact in US dollars only. We no longer have a selection for the Canadian dollar or euro. We just have a selection. We can only pick all currencies if we wanted to change this. And right now, this customer owes us $2,000 in the business partner currency or US dollars. So if we look at our local currency, right now, based on the accumulation of the documents, that 2,000 US they owe us has a value of 2,520 Canadian dollars. So we'll look at this customer as well. It is also a US currency customer. Currently, they don't owe us anything. And my AR account is this 12,125 AR US dollars. And if we click on that, we see it as a US dollar account. So my control account must either be the same currency or it must be all currencies. So one thing I wanted to mention here is, as a general rule, SAP can support all currencies on business partners, as you can see, but people processes may have to be aware of those things I mentioned about the purchase order and making sure the first document in the chain is the currency that is going to be transacted in. And one other thing to note is if you are using consolidated business partners, the parent must have an appropriate currency of the children. So if I have children in Canadian, my parent can be Canadian. If I have a mix of children, some in Canadian and some in US and some in other, then my parent must be set to all currencies. So let's talk about price lists and currencies. A price list can now have up to 3 currencies. These 3 currencies are set independently. Price lists can be based on price lists and they will inherit the multiple currencies used. And the price on a document row originates from the price in that price list of the same currency. So for example, when we've got a price list with both a Canadian and US price, when we deal with a business partner that's Canadian, they'll get the Canadian price off that price list. When they deal with a US business partner, we'll get the US price off that. So let's take a look at that. So in the price list here, this base price list, we say the primary currency is a Canadian dollar. The additional currency is a US dollar. And that just helps us when we type numbers into these unit prices, it'll default that currency for us. So looking at that top row, our JB Office Print 1420, it is a $400 Canadian price on this price list and a $380 US price on this price list. If I was using my 1.25 exchange rate and didn't have a second price, a different US price, it would be the equivalent of $320 US. But in this case, I'm independently setting them. And I've got a second one for $200 Canadian, or if I also sell it, it'll be $179.99 US. So I mentioned price lists inherit that through. So with the regular sales price list, we've said that's based on that base price list we just saw, multiplied by 1.5. So what we see here is that $400 in the base price has become $600 in this price list, and that $380 as the additional US price has become half again as much to be $570 US. So we're going to show some business partners here. We've got C2000. They're on that regular sales price list, which was base times 1.5, as is C6000. Sorry, my C2000 was a Canadian currency customer, and my C6000 is a US currency customer, but they're both on that regular sales price list. Let's go and create a sales order for them. For that first part, and since it's a Canadian currency transaction, we brought in the $600 Canadian. This US currency customer got that $570, so that came from the secondary currency on that same price list. And as you note, I've set them independently. It isn't just today's exchange rate. So now we'll talk about documents and currencies. So a document that's in a foreign currency also maintains the local currency value. Depending on the settings, the exchange rate will update on later documents. So for example, a US purchase order can be copied to a goods receipt PO and then to an AP invoice, and that can result in different local values of that purchase order, of that chain, even though the foreign currency document total didn't change. One of the impacts of that is it may revalue inventory at the time of the AP invoice. So let me show you purchase order number 415. So purchase order 415 is made to a US vendor for $250 US. That's what we're committing to. And there is some tax, so that's $282.50. Let's look at the relationship map on this. I've copied it through without changing anything. So our $282.50, including tax purchase order, is a goods receipt of the same US amount and an AP invoice of the same US amount. But this purchase order has an exchange rate of 1.24. That's what we were expecting at the time we created it. So if I look at the goods receipt PO, since I did this on a different day, and because of my settings, the exchange rate came from the day rate. The exchange rate changed from $1.24 to $1.25. That didn't change my foreign currency total, but it did change my value in local currency. So if we look at what the inventory transaction did, because of the 1.25 exchange rate, we added $250 to inventory because that was our line price, and that had the equivalent of $312.50 Canadian inventory value. So from that goods receipt PO, we did the AP invoice. The AP invoice we copied directly through, but it took the 13th of November's exchange rate of 1.2821, which is different from what the goods receipt PO was at 1.25. So the document on the face looks the same, but behind the scenes, that original inventory of $312.50 on the goods receipt PO was bumped up by $8.03 because at AP invoice time, it was worth more to us in Canadian dollars, so SAP has revalued the inventory. So we've also got currencies at the line level. So an individual line on a document can have a unit price in a different currency than the document. It has its purpose, but it's not commonly done. So for example, a sales order document can be a Canadian document currency, but the line can have a price in US dollars. As the exchange rate fluctuates, the different documents, like the sales order, the delivery, and the invoice, may have different Canadian totals. So when you start that first document and price it that way, the agreement with the customer would be the saying, you're expected to pay the appropriate Canadian amount of that US line at the time. So as I say, this has its purposes, but not commonly done. So if you're doing this, ensure this is your intent. So we're going to look at sales order number 355 and follow it through. So this is the US sales order, and I've priced it in Canadian dollars. The line total turns out to be $500 because I have a 1.2 exchange rate on this document. It got it because I posted this the 1st of September, and that was the daily rate at the time. I kept taxes out of it, so we can see the $600 commitment I expect the customer to pay. I want them to pay in US dollars for the value of 600 Canadian dollars. So when we look at the let's look at the relationship map of this. So this one looks a little different. I kept the 600 Canadian line item price throughout the system, throughout the chain, but now you can see the document total has changed. So when we first did the sales order, basically I told the customer, you're going to be charged 600 Canadian for this, and I expect you to pay today about 500 US dollars. By the time the delivery happened, because the exchange rate different, I still expected 600 Canadian dollars, and I got at that rate, it was an expectation of $483 in US is what they'd end up paying. And by invoice time, the exchange rate had changed again, so my $600 Canadian ask became $467.98. So let's take a look at that. So we see the 1.2 exchange rate here. When we look at the delivery document, we see it went to a 1.24, which helps us understand why we want fewer US dollars for our Canadian 600. And by the time we went to the AR invoice, it went to the $28.21 value. and our $600 is now we're asking for $467.98. So one thing you'll notice here when we look at it, because that exchange rate, that really is $600 of revenue and $600 local value on our AR, although we're really asking the customer to, at this point, now you owe us $467.98 US dollars. So that's used in some situations, but more commonly what we see is when the document currency doesn't match the unit price currency. That's often a mistake, but it is used intentionally in some situations. So now we want to talk about the revaluation process, AR, AP, and bank account. So just to get an example out there, each transaction in a foreign currency bank account accumulates both the foreign and the local currency. So in this example on the screen, we've got the first day, we're going to deposit $100 US into our account. And since the exchange rate at the time was 1.3, that's $130 that it cost us to get it there. So that bank account at the end of day one would show $100 US or 130 Canadian equivalent. On day 15, we made a payment of 90 US dollars. That day's exchange rate was $1.27. So it works out to $114.30. So that document is got a local value of $113.40. So by the time we deduct that transaction, we're left with a balance at the end of day 15 of 10 US dollars, the 100 minus the 90, and 1570 Canadian, the 130 minus 114.30. So that's a 1.57 result exchange rate of the balance. But at the end of the month, we really want that closer to 1.25 because on October 31st, in our examples we are about to see, my exchange rate is 1.25. So we would expect the Canadian value of my US bank account is $12.50. As long as I have it maintained, that account in a US dollar currency, I really do have 10 US dollars, but the Canadian value may fluctuate depending how I choose to work it. So to get to this 12.50 Canadian, we'd use financials, exchange rate differences, and that'll adjust the local value of a foreign currency account to the appropriate exchange rate. So let's look at an account. We'll look at our US checking account here, this 1115. It's got 40,000 US, and the current value is 48,000 Canadian. So let's take a look at those transactions. So in here, I've got 3 transactions. The first 2, I received an incoming payment with an exchange rate of 1.24. And on the third line, I bought some US dollars at an excellent rate. I bought 5,000 US dollars, and it only cost me 4,681 Canadian. So ignore my exchange rates at this point. The point was to show we've got 3 transactions using 2 different exchange rates, and that's separate from what I really think it should be worth at October 31st. So you see on the first one, we received $10,798, and based on the exchange rate, that is 13,390 Canadian. Then we received 24,000 US dollars, and based on the exchange rate, that's 29,928. And then that third transaction I talked about, I bought just a little over $5,000 US, and it cost me only 4,600 Canadian. So the end result is, from these 3 transactions, I have an account that accumulated to 40,000 US, and it accumulated to 48,000 Canadian. So while I never did use a 1.2 exchange rate because I did use different exchange rates throughout the transactions, it totals up to a net of a 1.2 difference. So we're going to go into financials, exchange rate differences to do that. So under financials, exchange rate differences, we're going to deselect the business partner because we're not doing the business partner right now. We're doing GL accounts. We're going to pick an execution date, and I want to revalue my bank account as at October 31st. And I have to put in my gain-loss accounts. I can leave the AR and AP with values in if you want, but I'm going to use my 823 account for that. Whoops. So let's go back and say what we did. I unchecked business partner because I just want the bank account. I don't want all my accounts. I just want the single one. I picked the execution date, and it's going to use the exchange rate on that date. I've got in my gain-loss accounts. Then I'm going to execute. So here, let me pick just my US checking, and I'm going to execute that. This has not created a journal entry for me. It shows me what it thinks it's recommending. So I get one line for every account I selected. I only selected one account. The current balance is 48,000 Canadian, and it's 40,000 US. Because my exchange rate on October 31st was 1.25, it thinks it's suggesting an adjustment of $2,000 to bring my 40,000 US to 50,000 Canadian. So I'm going to click approve. I could also say approve all if I had multiple accounts and multiple rows. And I'm going to add that. So let's go back to that account balance screen. Now what we see is those same three transactions there, 2 incoming payments and my purchase. And now it's created me a journal entry that has no foreign currency. It's a local currency only transaction, because we don't want to change the US cumulative value. It's still 40,000, but we are saying the Canadian value is 50,000. So it's bumped up the value of my US bank account in Canadian funds to $50,000 as at October 31st. So with business partner revaluation, it's very similar. We're going to select a business partner this time. We'll select a subset of the business partners if we want. I could run this more than once. I could run it once for my customers, once for my vendors. So same sort of thing. We'll pick the execution date, and it'll use the exchange rate, and we'll enter the appropriate gain-loss accounts. So this time through, we're going to uncheck the GL accounts, check back on the business partners. Here's where I could select just my customers, or I could select based on property or ranges. Here in this example, I'm going to pick everything. I actually don't have any vendors that I'm revaluing right now, just customers. So we've got our execution date there of October 31st. And we'll put our exchange rate accounts back in. They don't have to be the same for the gain side or the loss side, or the same for AR and AP. So that's what I've done. I've selected business partner. I've selected all of them in my case. I've got an execution date, and I've got the accounts. There's a few more other fields I want to point out on there. We've got a section for exclude gains with a due date after. So if I fill something in there, it will exclude a document if it would result in a gain and the due date is after that time frame. And the due date to and from, I can restrict my revaluation to documents that fall into a certain due date range. Execution date, we've already seen, but it's important to note that documents after this posting date are not included. So I'm running this October 31st, so all of my November invoices are not going to get a revaluation. Sorry, it's the business partner will not get a revaluation based on my November invoices. We've also got consider reconciliation date. With it checked on, it will include transactions that are that were open at the time of October 31st, but are no longer open and they've since been reconciled. We've also got a data side option there where we can include gain and loss or both, and that's not based on a single document, that's based on the aggregate change of the business partner. So commonly, what we're saying is to consider reconciliation date. That was for don't include the November invoices after that. So exclude gains with due date after we talked about, and the due date of documents we talked about, but I'll leave those empty. And both sides is what we said. So let me execute this. And we see that customer C9000 is here, but it's actually got no balance currently because I'm including, let's go look at their activity. Since I've said consider reconciliation date, even though it's got no balance now, it's going to revalue those because the invoices were done back in September and the payments were done in November. So it will revalue even though they're not open anymore because of that setting. So let's execute that now. And we'll point at a couple of things. Recommend auto reverse because these revaluations, I want to reverse them on the 1st of the next month is my preference on the business partner, not on the bank account revaluation. Other things I can do are double click the row to see the details. So for this business partner, we've got 2 transactions. The first transaction is for 1,000 US for 1,250 Canadian. We're with an exchange rate October 31st of $1.25. It's not recommending any revaluation amount for that because that document does happen to have the same exchange rate that is on October 31st. The second document you can see was 4,000 US and its balance, its value is 4,800. So to get to a 1.25 on this business partner, we've got to add another $200 to make that 4,000 US equal 5,000 Canadian. I can unselect certain rows if I wanted to, if there's reasons why I wouldn't want certain documents. And again, I can approve all, or I can unselect certain business partners if I don't want to do them. So we saw the execute. I recommended the auto reverse. And after you do that, remember to execute the actual reversing transaction that's created from that. We double clicked a row for the details and pointed out we can select a subset of transactions and a subset of business partners. So let's go back and we'll now add that. Okay, so let's show what happened. Show what happened here on customer C7000. So they've got an account balance of 2,000. And so there's a revaluation October 31st for an extra $20. So we have a $2,500 local currency and a 2,000 foreign currency. So this $2,500 is now reflected in the control account for the Canadian equivalent as well. So for this customer, I didn't make it a reversing entry, not what we're recommending, but what happened here is we did the invoice. I did a non-reversing revaluation. We recommend the reversing. And then I did the payment. The payment clears off the value of the document. So it cleared 1,000 US off of the customer and 1,240 Canadian. So you'll notice what I'm left with is they owe me $0 in US, but they owe me $10 in Canadian. That's why this ideally would be a reversing transaction, or the next month's revaluation is going to catch it and revalue $0 US back to $0 Canadian. So that's what we'll notice here on this. We see the business partner currency, they owe us no money, but in local currency, they owe us 10. That's because it wasn't a reversing one. So this customer, they owe us no money in either local or business partner currency. So let's take a look at that. We do see here a reversing one. So they owed us 1,000 US or 1,240 Canadian. We adjusted that to 1,250 Canadian for the value at the end of October. Reversed at the 1st of November to take that back. So when the payment happened, it cleared off that 1,000 US at 1,240 Canadian. So let's go back and take a look at this incoming payment. Take a look at the journal entry. So what I wanted to point out here was we're clearing off that 1,240 Canadian. We still did get a realized gain because of the timing of this journal entry. The exchange rate on this incoming payment when we received it was 128.21, so it is worth more Canadian money to us. It's still, though, we can only clear off that document or the 1,240 from the customer, and we gained $42.10.